Next guest thinks that the central bank is a long way from easing. Joining us right now is Jason Trennert, Chairman and CEO of Strategas Research, which of course is a Baird company. It's nice to see you, Jason. You say it's a long way, so give us your expectation for tomorrow then.
Well, listen, I think I wouldn't quibble with the idea that inflation has peaked, but I also think that we're a long way away from the Fed's target of 2%. I'm not sure the Fed has like the suicide pact with 2%. They may stop sooner than that, but clearly inflation is much higher than the target, and I think it's going to have to stay there for a while. After today, there's only going to be 4 meetings left. And Andrew, as you know, probably about a month ago, one of the main reasons for people to be bullish on the equity market was the expectation the Fed would ease. And my view is simply that the Fed is going to have to see inflation at least closer to 3 for several months before it can actually start thinking about easing. So I think they're going to pause. Long-winded to answer your question. I think they're going to pause, but I think as we saw with Australia and Canada, a pause doesn't mean that you're finished tightening, because both of those central banks paused and then they had to raise rates later on.
Okay, Jason, let me ask you this, and it's the same question I asked the Treasury Secretary just last week, which is, if to get the rate down, what do you think unemployment has to look like in the United States? Because I think that actually is becomes a both policy and almost a political question.
Andrew, I think you're absolutely right. I think the Fed, too, is very much of a Phillips curve organization, which means that it spends a lot of time looking at the labor markets. There's 1,000 PhDs there. It's very model-driven, which, in my opinion, can be a weakness, just to the extent to which you might be better off just talking to regular people, more often. But I think, generally speaking, there's something called, I don't want to get to the SOM rule. You basically need to get unemployment rate up 0.5% before you start actually thinking about a recession. And I would imagine that the unemployment rate would have to be well over 4 at a minimum for the Fed to really feel comfortable in starting to ease.
So, Jason, for your thesis to play out properly, are you looking at this stock market and saying this doesn't make any sense? That this rally is sort of a head fake? Is that what you're trying to suggest?
A little bit, and I have to say we've been on the wrong side of it. I mean, and just the extent to which, our clients are compared to the S&P 500, not the S&P 500 equal weighted. That would be stronger. That would be easier to defend. But there's no way I could claim that we've seen. We expected 7 stocks to propel the market to be up 12%. Year to date. And what's hard, of course, is that this is a very difficult thing to argue against, because most of these stocks have something to do with AI or an expectation of much greater productivity. And we're such in early stages that it's a difficult thing to argue against. And so I could see this getting worse before. I mean, from the standpoint of an equal weighted perspective versus market cap weighted.
Look at that chart, and you got to give you kind of a sick feeling that you've been bearish the whole time.
Yeah, no, I mean, we got bearish last March. I mean, we felt,
since good. October, the Nasdaq's up 30% or something.
I'm with you, but there's also our clients.
Well, how do you ever get in?
It's actually risk.
Right. But how do you ever get in?
Risk versus.
How do you ever get in at this point?
I think it's hard to get in at this point. I think it's probably.
You'll never be in again. What if it keeps going?
It could. It certainly could. But it's probably too late to buy and too early to sell. I do think.
So what do you do? You're just sitting on your hands, Jason?
What's that?
You said too late to buy and too early to sell. So what do you do?
Well, I think as far as those stocks are concerned. In my opinion, I think for the average person to jump in now, I think you're taking a lot of risk. The risk reward is not there. I still am very much of the view that a recession is likely in the next year, and I've never seen a recession in which the market bottomed before the recession began. And so the odds favor that. I could be wrong. There could be other things that happen, but generally speaking, when the Fed tightens to this degree, it's pretty hard to avoid a recession. Right.